again, and thanks for joining us on another edition of MPA TV. I'm Fergal McLendon. I'm the news editor over here at Mortgage Professional America. And today we're back for another look into how the US mortgage market has been faring of late and what a leading company in the space is keeping top of mind. We're already well into the second half of what's been a really eventful year in the mortgage space to date. And today I'm really pleased to welcome a top lending executive to talk us through his thoughts on 2024 so far and what's in store down the line. So our guest today is none other than Pavan Agarwal, Chief Executive Officer of SunWest's Mortgage Company, joining us today from Puerto Rico. Pavan, great to have you with us today. First of all, how's everything going with you?
Everything's wonderful. I love what I do. I love working on technology and helping people. It's just, I'm having a blast.
Glad to hear it, and we're thrilled to have you on today. I mean, we're talking at a really interesting time, Pavan, for the current market. We've seen a lot of big developments over the past few weeks in terms of the outlook and interest rates and things like that. But maybe first of all, just tell me about how you've been viewing the current market and your thoughts on how 2024 has been so far in the mortgage space.
We've actually had a really good couple of years. And, you know, it's all about scalability and understanding how to scale down and scale up as the volumes move around. So our advantage is we never have to chase production because our fixed overhead is so low, so it's negligible. And therefore we can scale it infinitely either way.
All right, great stuff. How about when it comes to 2024? Obviously, it's been a pretty different market this year compared to previous years, but is there anything in particular that you've been keeping top of mind in your own approach to business so far this year?
Okay, well, as you know, I mean, everything that we do is AI centric. So we're not like any other mortgage lender. And so our AI product has been in production for years. So through the big upswing in COVID and then the drought that followed thereafter. So the challenge that I think a lot of lenders are going to face is most lenders are going right now from dying of thirst in the desert to drowning in a flash flood. Right. And that flash flood is about to hit. And I'm already seeing signs. I'm already seeing people feeling the pain of, wait a minute, we got all these deals, they're clogging up our pipeline. We don't know how to get them through, right? And then the subsequent reputation damage and so forth. So and a lot of IMBs have been stressed for the last 8 to 10 quarters. We did a survey of our warehouse lenders, and they basically came back and said, you know, more than 99% of their customers have had, 6 to 10 quarters of consecutive losses. And they've been issuing waivers just to keep them afloat. So, and as you know, the Fannie, Freddie, and Ginnie regs are that if you have multiple quarters of consecutive losses, then you could potentially lose your ticket. So this, so sitting on top of Mount Olympus is we have, the God of all gods, Emperor Chairman Powell, right? And he's taken a look at us mere mortals and says, okay, we're going to help out these mortgage bankers, and he's talking about lowering rates. So from Mount Olympus, he's seems like he's about to shower money on us. But as tricky as these gods are, he may end up drowning us. So technology is the key. If you don't have the ability to scale, you're going to have big challenges. And I think it's actually for many lenders, many IMBs, the worst is perhaps yet to come. They survive the drought, they may actually end up dying of drowning now.
Oh, I only wish that I could match the really stark imagery that you're able to paint with your words, Pavan. My questions are a little bit more prosaic, but one thing that I wanted to ask you, and you touched on it already, was just about your approach and what kind of sets you apart. Like obviously there's so much competition in the mortgage space these days. You mentioned your focus on AI, which is something that you had been very geared towards even before AI over the past couple of years became such a massive topic. But is there anything in particular that you think really sets you guys apart or that you focus on and keeping you apart from the rest?
Well, I'll put it in terms of financial terms. Okay, so the MBA, I think MBA of the Gartner Group has a study that basically shows for the average IMB, it costs about 13, maybe now a better, $12,000 a closed loan. And if you take out roughly half of that as commissions, okay, commissions are fixed, so let's just take the commissions out. So you're looking at $6,000, anywhere from $3,000 to $6,000 of closed loans, depending on how efficient you are, right? And that's over a point. The average loan amount, that's over a point, is lost in operating costs. So now you got to take that and you got to scale that up. How are you gonna suddenly do another 1,000 loans a month? Okay, and without driving those costs out of control. Okay, so where we're different is our operating cost per loan is below $200 a loan. So we're less than 1/10 of the industry, maybe 1/20th. Okay, so when our marginal cost to produce is less than $200, right? Then it doesn't matter how many loans we do, right? We're always profitable. Okay, and so as the volume increases, right, then we're massively profitable, right? And the only way you can get your marginal cost down that low is you got to have proper technology. You got to have it's really only AI can do it.
I think that we're all focused really heavily on how AI is going to impact the space in the next few years. So it's going to be a really interesting conversation and interesting journey. How about Pavan? Like obviously brokers are a very big part of our audience and our readership. How are you working with brokers this year? And is there anything that you think that they should be keeping top of mind in the current market?
Yeah, so basically we love our brokers. We love the industry in general. I mean, I'm here to help everybody. So what we did, which is people can't believe it, is we make Angel AI free and accessible for everyone to use. So it's a very open platform. And so whether you're a broker, an IMB, or a competing lender, we don't care. Go and use it. And if you can benefit from it, that's great. And in the long run, I think our long run strategy will pay off, because in the long run we're building, every time someone uses Angel AI and then they fall in love with it, pretty much everyone who uses it falls in love with it, and we're building long-term relationships. And in our 40 years of being in this business, I've made as much money doing deals with our competitors as I have actually doing loans, right, directly. So I really don't see, in this business is too small that you really can't look at people as competitors or as partners. I think everyone's a partner in this business, and that's why we're giving away the product where people can use it. And in fact, I made the announcement last week at a major conference that now anyone can use Angel AI as their replacement loan origination system. So you can literally flip to Angel AI, it'll do your underwriting, closing it. You just need originators essentially. And our two first clients have already passed the test, so to speak, or have been fully implemented. One is a startup brokerage in Southern California, and his business has been taking off. It's in 3 months. He's doing record production before the refi wave is hitting. And another one is a large bank, or it depends how you define large, I guess. It's a large bank out of New York called Quantic Bank, and I think they've recruited close to 100 loan officers because of the platform, and their volumes is skyrocketing. And they're actually now in the process of switching, because they had a legacy loan system, and they're looking at potentially dropping that and moving everything to Angel AI. So they started the retail channel on Angel AI, and they said this is great. And they hired basically 100 loan officers and no operations people, right? And they're not paying anything for the technology, right? Because it's all part of the package, right? So I think all of these lenders who are about to drown in this flood that's coming at them, there's a way out. So I'm giving you a what do you call it? What are those round circle thing, life floaty things? What do they call it? Lifesaver. I'm giving you a lifesaver, right? So I'm driving up next to you in an aircraft carrier throwing you a lifesaver, it's up to you to grab it or not. Right? You're in the middle of the ocean drowning, and I'm here in an aircraft carrier with a lifesaver. So take your pick, and you can not only save yourself in this flood, but have crazy profits. We did the math. It's over 95 basis points in savings by switching to our AI platform.
All right, well, that is great to hear. And I want to switch to crystal ball time, Pavan. Obviously, we talked a little bit about what Chair Powell was talking about in the Fed retreat at Jackson Hole last week. Looks like interest rates are on the way down. We're expecting a Fed cut in September. What are your thoughts on the rest of the year? What's going to transpire? And yeah, give us your thoughts on what's going to happen.
Well, I think the market's already priced it in, right? If someone's out there expecting like, oh well, there's going to be a rate cut coming, and therefore we're going to see another quarter, half a point drop in interest rates, right? That's not going to happen. There might be a little movement downwards interest rates, unless the Fed comes out with a new statement that says we're going to get more aggressive on rate cuts. It's already priced in. So don't like think that it's going to get a lot better before the end of the year. Okay. Now, no one knows the future. I mean, the Fed could turn around and say, hey, well, inflation went out of control. We're going the other way now. Right? You just don't know. There could be another war that starts up. There could be supply chain disruptions. I mean, who knows? Oil, oil can stop coming out of Saudi Arabia. There could be, a conflict there. So there's a lot of uncertainty. So nothing is locked in, right? It's only locked in when you call your secondary desk and lock it in, right? So if you have a deal, if you have a borrower that's in the money, and there's a true benefit to the borrower to refinance, I would always advise them, take the trade, lock it in. Good smart trading. Every good trader, whether from Warren Buffett to whoever, right? Basic rule of trading is you take your profits off the table when you can. You don't. If you keep doubling down, you're going to lose eventually, right? So unless you have a crystal ball and you can see that Chairman Powell of the Fed is going to make another statement, even more dovish than what they already have. Okay, if you have good reason to believe that, then okay, take your chances. But if you really have good reason to believe that, I would say, why are you wasting time in the mortgage business? Just go along the treasury market. You'll make them a lot more money with a lot less headache, right? So if you really believe rates are going to get a lot better, just buy a bunch of treasuries right now while you still can.
So, Pavan, tell me as well about a research paper which has just been published on AI bias and specifically on its impact in mortgage lending. I believe you've been looking into that recently.
Yes, so there's a researcher at Lay University, an AI researcher. So he ran a study where he put in 1,000 randomized loans into ChatGPT and asked it to make decisions. And he was able to demonstrate consistently that ChatGPT dramatically denied black borrowers over white borrowers for the exact. I mean, if you just change the race, you change from black to white, it approved it. Changed from white to black, it declined it. Right, and it was a big gap. It wasn't just a slight difference; it was a big difference. And so the key takeaway from this is that it's not. Don't blame the AI, right? We need to blame ourselves, because the AI is simply taking all the data that we already have, all the data that it has available about loans and everything that the industry has done historically. It's found those patterns, and when you ask an AI question, it just repeats those patterns, right? So think of the AI as nothing more than a mirror on ourselves, a mirror on humanity. So so now you're able to see exactly what we were like, right? By asking these questions, and it gives you the answer. It's just saying, this is what I've been trained to do. It's sort of like, you ever see that movie Who Framed Roger Rabbit? Old Disney movie.
Yeah.
And I love my favorite line in that movie with Jessica Rabbit saying, "I'm not bad. I'm just drawn that way." so the same thing, the AI is not bad, it's just trained that way, right? And it's trained on us. We trained it. It's who we are, it's what our industry has done, right? And we've been talking about, we found this, we recognized this over a year ago. We published on our website, swmc.com/fair lending. And we found this bias and we published it. We found the bias in the data and we published it. And we don't have that bias in Angel AI. Okay, for couple of really interesting reasons. Number one, Angel AI is not built on top of ChatGPT or any of the other what they call large language models. Okay, so the bottom line is what that means to you is that if you're jumping on the AI wave and you're saying like, okay, hey, ChatGPT is great, it is great, it's an amazing piece of technological innovation, and they spend hundreds of billions of dollars to build this thing. But this research proved what we've known all along, and why we built Angel AI on a novel and a different kind of neural net is the researcher proved that you cannot get correct decisions for mortgages or any kind of high stakes decisions from a underlying technology like ChatGPT. Okay, so everyone rushing to build mortgage lending AI systems based on LLM technology, I think you're in for a rude awakening. It's not going to work. In my opinion, it's not going to work. Okay, so that's number one. Number two is the way Angel AI was trained and built. Okay, it's built on our 44-year history, and we're basically a minority-owned company with our board is 3/4 female, and all minority, and our history, our DNA has been about serving the underserved markets and underprivileged markets. And one of the most interesting things I found in our study, in our research, was Black borrowers were declined about twice as often as white borrowers, but veterans, and this is very sad, veterans were declined 3 to 4 times as often. Okay, and they're the ones who sacrificed the absolute most for our country, for our freedom, and they're getting declined, they're getting treated the worst. Okay, so that's sort of the bottom line. And then because the way our neural network is built, and it's built exactly to the agency guidelines, exactly to the government guidelines, and is trained exactly to that, because that's the way we've always done business. Okay, our AI hits it right on the mark every single time. And to the extent where I put 100%, what I call 100% trusted warranty on the AI. So when you go to Angel AI and you ask it a question, you ask it, can I ignore these student loans or whatever? And if it gives you an answer, says yes, you can ignore the student loans for this reason. You don't have to ever question it again, because if it was wrong, if it made a mistake and you weren't supposed to ignore the student loans and you're supposed to include the ratios, and if you did include the ratios, the loan would not be approved. Okay, and every loan originator, every mortgage broker listing right now, every real estate agent listing right now has had those situations happen to them more than once, where underwriting or quality control or head of credit or somebody raises a red flag day before closing or day of closing saying, oh, we can't fund this loan because this was done wrong. Okay, or we have to change what we said about those student loans or about that debt or whatever. Okay, that will never happen with Angel AI because of the warranty, and the way the warranty works is if it was wrong, I'm going to fund that loan and balance sheet it, put it on my balance sheet regardless.
Very interesting, and certainly a wake-up call for the industry where that report that you mentioned is concerned.
Yeah, it's a big wake-up call, right? And
Okay.
I think a lot of people can sense and feel that there's something wrong, right? But you can't, and without this research, or without ChatGPT, without AI, you couldn't prove it. You could feel it, but you can't see it, And now you
Right.
can actually see it, right? Right. So it's like, imagine like you went through your whole life and you've never seen a mirror, you've never seen yourself. But you feel like, okay, I got a blemish here, I got something going on here, but you don't know what it is. And now you see the mirror. And that's what just happened.
Yeah, I think that if we've learned one thing over the past few years, it's that the only thing that's certain is that nothing is certain when it comes to the outlook for the rest of the year and things like that. So, definitely wise advice.
Yeah.
You've given us plenty today, Pavan. A lot of great imagery. Do you have any final message for our viewers before we wrap things up today?
I think, from a very long-term perspective, I'm not talking about, in the mortgage business, 12 months is an eternity. Everything fortunes are made and lost in 12 months. But I'm thinking on a very long-term perspective, like 3 to 5 years out. I actually think we're going to end up in a deflationary, we're in a long deflationary cycle that hasn't quite kicked in yet. The real core hasn't kicked in yet, but it will start. And the deflationary cycle is a result of a multitude of technologies that are coming together at the same time, between lower energy costs from renewables and alternate energy sources, 3D printing, and artificial intelligence. All three of these are converging. This is like a rare moment in history, kind of like what happened in the 20th century with right around World War II, where multiple technologies all happened at the same time, and there was just this explosion in wealth and standard of living. I think the same thing is about to happen right now, and that's going to result in the cost of most commodities going to near zero. So I actually think we're headed towards a very extended deflationary cycle and race near zero, but we got a couple of years of pain before we actually see that as the technology mature and kick into the economy. Right. So just to put that in perspective, PricewaterhouseCoopers, they came out with studies saying that by 2030, right, which is only 6 years away, 5 years away, right, $15 trillion will be added to the economy from artificial intelligence alone. Right. I mean, that's half our national debt. Right. Just from artificial intelligence. Now you're talking about the other technologies that are kicking in. So that much money being dropped into the world economy are essentially not cash, but productivity being dropped into the world economy you can imagine what that does to the cost of goods.
Absolutely. Yeah, we are in for a big transformation down the line. Look, busy rest of the year in store for sure. But Pavan, we're going to leave it there for today. Thanks for joining us. Really appreciate your insights and plenty of food for thought there for our viewers. So I'm sure that we'll catch up before the end of the year. But until then, great to talk to you today and all the best for the rest of the year.
Thank you.
All right. Well, that just about does it for today's edition of MPA TV. My thanks once again to Pavan Agarwal of SunWest's Mortgage for joining us. Thanks to you for watching, and we will see you next time.